Good day, fellow deal makers. Welcome to the Deal Scout. This show is all about deals with deal makers. Purpose and mission of the show is to learn, to educate ourselves on different types of deals, what to look for in a deal, and what is a good deal, what's a bad deal. And then also the mission and purpose of the show is to put deals and deal makers together. So if you're listening in and you'd like to connect with the guest, their contact information will be in the show notes. Connect with them directly. Say, hey, my friend Josh told me to connect with you, and then start off the conversation there. Right? Cool. All right. So on today's show, we're going to talk about the cannabis industry and some of the interesting things going on in it and the opportunity within it. So Doug, welcome to the show.
Thanks, Josh. Happy to be here. Thanks for having me.
You're welcome, man. So let's start with this. Where is home for you?
So I live in Mill Valley, which is in Marin County. I moved out to California about 12 years ago. I'm an East Coast native, so I grew up in New Jersey. Went to school in Pittsburgh and then was working in Manhattan after college, and then moved out to California in 2010.
No kidding. Okay, so East Coast boy moves out to the West Coast. What did you find that were the biggest differences, East Coast boy to West Coast boy?
When I moved out to San Francisco, which was 2010, end of 2010, I again haven't been on the East Coast my whole life. I was sort of attracted to the kind of entrepreneurial spirit that was going on in San Francisco at the time. I think when you look backwards over the past 12 years and you just think about how many effectively revolutionary companies that fundamentally changed the way that we move through the world, that we interact with people, that we vacation. I'm thinking companies like Lyft and Uber and Airbnb that didn't really exist. It was and is a really interesting part of the world, and I really was drawn to that sort of entrepreneurial spirit that's so prevalent in the Bay Area. I thought that was pretty cool.
Every once in a while, I could hear the New Jersey accent pop through, right?
Maybe.
So that's good. All right, so you meet someone in a coffee shop and they go, "Hey, Doug, who are you? What do you do?"
Yeah.
How do you typically respond?
Yeah. First and foremost, in terms of what I do, I co-founded NorCal Cannabis, which we trace our origin story back to 2015. My co-founder, Jigar Patel, and I met in San Francisco. We were both sponsoring and entitling similar projects, which were effectively permitted indoor cultivation facilities. At the time, San Francisco was really the only municipality in California that was permissively zoning cultivation and production. So both Jigar and I entered the space from wildly different backgrounds, but I had just sort of started my entrepreneurial journey in cannabis and was working on a project that was very similar in nature to a project he was working on. And we kind of came together and started working collaboratively at that time. So having founded that company and grown that company and seen, all that's involved with it, that's sort of the focal point, at least professionally. And so I would say that to folks, and then that would come with a ton of questions. Oh, what's going on in the industry? What do you think of this? My friend used to grow. What? So it inevitably leads to a lot longer conversation, which is great. It's been a privilege to be involved in it, and it's been a great way to meet folks that either would have otherwise not met, and it's a privilege to be involved in a company that people care so much about. This industry is, it invokes passion in a lot of different folks for a lot of different reasons. So I would say that, and then see where the conversation took us.
Yeah. Now, it's funny. If you used to mention, the cannabis industry or cannabis in general 10 years ago, right? You have to look over both shoulders before you start talking about it. And you're like, am I even allowed to talk about this in this state or that state, right? So yeah. We've come a long way. And California was one of the big pushes. When you moved out to California, was it specifically for the cannabis industry? You said you wanted to be a part of the entrepreneurial community, but yeah. What drove you out there?
Yeah, so it had nothing to do with cannabis. I had an opportunity to come out and work for a real estate investment fund And so this is 2010, 2011. So the fund was distress focused in nature. We were buying a lot of trustee sale properties, auction properties, and had some success doing that, and then sort of pivoted to doing more traditional real estate development projects in San Francisco proper. So I'd say from like 2011 to about 2015, I sponsored maybe 15, 20 different real estate development projects in SF, and had the benefit of learning how that process works. San Francisco, California in general is a difficult state to develop real estate, and San Francisco is acutely difficult for a host of reasons, but you have pretty restrictive planning codes, and it's typically a challenging and lengthy process to sort of realize your entitlements. So having done this, a dozen or so times, and sort of had an understanding of what the process looked like, I guess cannabis sort of came to me, if you will. I didn't really know much about the industry. And it was 2014, and I was curious, so I got a medical card. And I basically walked into what at the time was one of the busiest dispensaries in San Francisco. It was the Apothecarium on Market Street. And I remember going in there without any real understanding or conception of what the industry looked like. And I was in there for, I don't know, maybe like 3 minutes, and I spent a couple $100. And as I walked outside, I saw a line forming around the corner. And I thought, wow, is everybody going in there and spending $200 in 90 seconds? Like, I wonder what's going on with this business. Like, I'm intrigued, I'm curious. So much so that I actually paid a guy the following week to stand outside of it with a clicker and just count the patients that walked in. And so initially, as I'm looking at the opportunity, I'm looking at it through the lens of a real estate developer. My initial sort of thought was, well, these cannabis dispensaries seem to be generating a tremendous revenue on a per square foot basis. And, as a real estate developer, perhaps this is something we should look at. This is 2014. So the majority of the real estate that we bought was between 2010 and 2013, when prices were quite a bit lower, and we were finding great deals. It was getting harder and harder for us to find really accretive deals. And, this seemed like something that was worth pursuing. So I started to look into it a lot more, started to meet with attorneys in the space. At one point, I pulled all of the planning department applications for every dispensary in San Francisco that got approved. And I saw Brendan Hallinan, who was an attorney in SF. Brendan's father, Terrence, was the DA at one point, and Brendan was responsible for helping maybe like half of the dispensaries realize their entitlements and get permits. So I called him, got a consult with his office, and we became fast friends. And he kind of helped me navigate this initially. And what I realized in 2014 was it was a little bit difficult to enter as a pure play real estate developer. You didn't really have established businesses. Your tenants very rarely had bank accounts. And we were still coming off the tail end of federal enforcement. And it wasn't the DEA like raiding cannabis dispensaries in 2014, but you did have the U.S. attorney at the time sending asset forfeiture letters to landlords. And I just thought, well, there's clearly something here that's interesting. But to sort of be a pure play developer and raise capital and rent these buildings when we couldn't figure out why certain dispensaries were getting target letters and others weren't, there was just too much uncertainty. But I was hyper attracted to the industry. I was really enjoying the people that were in the space that I was meeting. Again, I think partially because they had sort of an entrepreneurial spirit to them that I was attracted to. And so in late 2014, I decided that I wanted to be in the space, and I wanted to be in the space as an operator. So the first thing I did was leased a building on California in Front, and worked with the health department in San Francisco and the planning department to effectively permit what was, I want to say, probably the first, delivery only dispensary that was fully permitted by a municipality in California. We kind of created that in the planning and health department code. Did that in 2014, applied to do that, I should say, and realized, thought at the time, we should be vertically integrated, because If you walked into any dispensary in California in 2014, really the only product on the shelf was unbranded flower, right? You didn't have the depth of SKUs that you do today and the range of products that you do today. So to vertically integrate was really only one product. As I sort of looked at that line of business, it was then that I met Jigger and we sort of came together, more formally in 2015 and 16. And that was the first time we hired employees or raised any capital and kind of formally started this journey. So
Yeah. Super awesome. So you moved over to the West Coast to do some real estate deals, to work with a investment group, and you were focused on distress. You saw a lot of cool opportunities, a lot of good deals, and then you got into, you walked into your own shop, the apothecary, right? And you bought some cool stuff. You walked out and there's a line forming. So you're like, this is interesting. You saw a hungry community, a hungry demand for something, and you hired a clicker. How do you go about hiring a clicker? Is that a job description on LinkedIn?
Craigslist. I found this
Really?
person. Yeah, yeah, just like random tasks. Somebody was like advertising, like, yeah. Is this before TaskRabbit and some of
Yeah.
these other startups that address that?
What did a good clicker cost you that day?
I think I would pay him $20 an hour
N-
cash.
nice to
Yeah.
sit there and click and count.
And then
Nice.
and then so I went on a Saturday and I sent him back on a Saturday and it was a pretty big number, but I thought, the data might be skewed. Like if I sat somebody outside of a bar on a Saturday and told him to count the people that came in, it'd probably be a high number. I sent the guy back on a Tuesday just to see if the demand was consistent and it was, and that's when I was like, God, there's really something here.
Interesting. So you went the route of, you pulled all the permits. You said, who's doing all this stuff? And ultimately, you guys landed on the path of inside cultivation and production,
Mhm.
right? Why that specific? What's wrong with outside? What's wrong with guys in the
Yeah.
basement?
Yeah.
Why inside cultivation?
Yeah, so initially and this is before meeting Jigger, I was exploring more of a greenhouse project in Sonoma County. I thought that would be the most efficient way to enter the cultivation vertical. And I remember talking to a fairly prominent attorney, cannabis attorney in Sonoma County at the time, and I said, we have this dispensary that's is going through its entitlement process in San Francisco, and we'd like to sort of marry it with our own cultivation facility and be vertically integrated. And he said, it's not really a good idea to do that up here. You'll probably get a hard time from the sheriff. I said, no, but it's fully licensed in SF and it's all sort of above board. And he said, yeah, that doesn't really matter. The sheriff's department's still liable to come in and cut your plants down and confiscate your. And I thought, well, that's weird, but I didn't necessarily understand why. And the reason that we settled on San Francisco, because you're right, Josh, like when you think of agricultural product, you don't necessarily think like, well, let's do it indoors in one of the most expensive cities in the country, right?
Yeah.
Especially when you have all this like perfectly arable land all around us. But San Francisco it has always been progressive, and they had a program where you could permissively zone and permit indoor cultivation. So we sort of backed into that, or I sort of backed into that because it was really the only opportunity or option that I felt we could do in a transparent way. And again, I was raising other people's money for these projects. So I couldn't have a situation where I raised people's money and then had to explain to them, well, it's sort of gray and the cops came and they raided us, but it's okay. It's like that wasn't going to work.
Yeah.
So by default, we landed in San Francisco, which I'm highly fortunate that we did because Jigger was running a ton of cultivation facilities and sponsoring stuff in SF, and it was through that lens that we sort of met each other. As the industry's evolved, the indoor side of the value chain, I think is, at least we find, probably where the most margin across the entire value chain comes from.
Where's the margin in the value chain?
So I think generally it's going to be on the cultivation side, right? More so than the retail side. Obviously, there's certain markets where retail stores are just like they're on islands and they do like incredibly well. But broadly speaking, if you look at the value chain in cannabis, most of the margin is coming from a producer that's growing a pound of cannabis for X and selling it for Y, right? And that spread is where that margin is. Now you can do that outdoors. You can do that in hoop house. You can do it in a light deprivation greenhouse or a complete and full indoor facility, which is where NorCal participates.
So for indoor, it mitigates the risk of weather. It mitigates the risk of insects or different types of pesticides or pestilence or whatever the case may be, right? So do you think it's more manageable and predictable for for the margin to have it indoors?
Well, we certainly do. I mean, I think when you look at the value that the product commands, there's indoor flower still commands a significant premium relative to greenhouse and certainly outdoor. And I think as an indoor producer, as we get more and more efficient, as technology becomes better and better, and we're seeing this every day, we can really bring our cost to produce that commodity, if you will, down to a level that really doesn't exceed a greenhouse producer in most cases. But because it's a better product at the end of the day, we're realizing more revenue from it. So for us, we've been doing this, for NorCal's been doing this for 7 years. The folks working here have been doing this for decades. And we've been fortunate that, we've sort of figured out how to operate efficiently and how to get our COGS to a level that's probably, for an indoor producer, I would say industry leading. And the margin that we see as a company comes from growing a pound of cannabis for $400 or $500 and selling it for, $1,000, $1,500, $2,000, kind of depending on strain and time of year and a host of other factors. But
Yeah. Now, you're a lot smarter than me. You're experienced in this industry. I do not know the difference between a greenhouse and a indoor facility. Kind of give us the similarities and differences.
Sure. So I think, what you typically find, with an indoor product is it's just, it's probably the best. Well, I guess I'd say it like this. If you're a true connoisseur, and you're looking at an indoor versus a greenhouse versus an outdoor product, you'll be able to identify immediately what was grown indoors and what was grown in a greenhouse. And California has always been a consumer, really frankly a connoisseur market, honestly, because you have to appreciate this is really ground zero for cultivation, right? I mean,
Sure.
As other states legalized, actually ahead of California, you saw a bit of a rush in Colorado and in Oregon and Washington. But historically speaking, the best cannabis has always come from California. So you have individuals here that have subject matter expertise and have been able to apply that and really push the envelope of what's possible from a quality perspective. And the consumers here recognize that. So they can certainly discern the difference. And I'm not too dissimilar to you, where I could be fooled between a really good light depth pound and a mediocre indoor pound. But if you were to look at the two together, the indoor product is going to be more manicured. It's going to be it's going to look better. And consumers are willing to pay for that. They know that and they want that.
What does your mom or dad or brother or sister, what do they think you do for a living?
Well, they're pretty aware. I mean, why don't you start Googling us? No, but my parents and they've always been super supportive. No, you mentioned something earlier, just sort of around the normalization of cannabis, and it's been so interesting to see, because I think about even when I started this 7-8 years ago. I mean, most of the people I met in San Francisco had no problem with cannabis, and none of them really were like, "Well, that's it's not okay that you're doing that." But certainly, I'm an East Coast native, right? So in 2015, telling friends and their parents what I was doing, and I would get this sort of raised eyebrow. Now, I mean, as the industry's grown and evolved, and cannabis is legal in the majority of states in America now, you don't get that reaction. But I think it's been interesting to see the pace at which it's been normalized, and the folks that, and this is a great thing, people that there was this stigma around cannabis that shouldn't have been there. And I think that sort of precluded folks from trying it. And and this is more prevalent, I think, with like slightly older folks, like the baby boomer generation. they may have experienced cannabis earlier in their life and it hasn't been a part of their life for a while because they didn't want to go buy, untested flower from some guy on Market and Eighth. Like that was not going to be a comfortable interaction or exchange for them. But now that dispensaries are legal, it's recreational, there are a ton of different product categories that speak to a host of issues that folks have, whether that be anxiety, sleep issues, pain issues, and it's a much more welcoming experience. So we're seeing people rediscover cannabis at a later point in their life, and I think it's helping a ton of folks out. And so it's been great to see that evolution and to see the normalization of it, because at the end of the day, it's a plant that can really help a lot of people. And the fact that there's been such a negative stigma around it is unfortunate, but the industry's done a great job to kind of, push forward and to some degree eradicate that stigma. You don't really, I very rarely meet people who think cannabis is like the devil's lettuce, right? Who think what we're doing is so bad and we don't believe, that's highly unusual now. And I think that's great.
Yeah. I don't know every state's laws, right? But you're saying that the majority of states are moving towards legalization and recreation. What's the resistance to going full legal on a federal level?
So I think there's 4 states in the country right now where cannabis is still illegal, right? So in every other state's either been decriminalized, or it's recreationally or medically legal, or some hybrid or combination of both. So I don't, and you saw, President Biden's tweet a couple weeks ago, a week ago, whenever that was. So I think the writing's on the wall, right? I think it's not a question of like if we'll see changes at the federal level. It's more a question of when those changes happen and what they ultimately look like. But this is one of the few things I think in the country today that kind of unites everybody, right? There's very few things that I think both sides completely agree on, and cannabis and the fact that it should be legal and not criminalized, I think, is one of those things. So,
yeah. So now that you're 8 years in,
cannabis is dog years though, Josh. So 7 years is really more like 35, just for context. But yeah, 7 or 8 years in.
All right. So in dog years, from now on, I'm going to count everything in dog years. In dog years, you're 35 years into this. What are some of the things that you still see as an opportunity, right? Like, let's just compare it to prohibition.
Sure.
Like, what was that, in the early 30s or whatever, when prohibition was going on?
Yeah. Mm-hmm.
In comparison, like what do you see is like the opportunity that's still hot for potential investors as I'm scouting out for deals and opportunities?
Yeah. Well, I think, while we've been talking about how it's been normalized and the growth of the industry and the legalization, you still have to realize how early it is, right? I mean, I think until you see some changes at the federal level, you could say it hasn't even really started yet in terms of what's possible and opportunities and what this is going to ultimately look like. So I think it's, we're on the precipice of like a sea change type moment. And it's exciting to be a part of that. With respect to NorCal and what we do and where we're focused, right? We've been 100% focused on the California market since we started. And for the first time, we're seeing opportunities to take the skill set, the IP that we built, into other markets. And we're seeing a real need, if you will, for that, right? Because I think in a lot of these East Coast markets, there's a lack of depth at the sort of production and cultivation level. And then I say depth in that, like, the individuals running these companies and businesses have only been doing this for a handful of years broadly. And I think, California producers and operators have been doing it for a lot longer and have been functioning in a much more challenging and competitive market. And so the opportunity to bring that into other markets and to effectively service customers in new markets is something that we're excited about. And then broadly and macroly, until, like I said, I think until you see changes, at the federal level, you have to appreciate how early it is. And there's tremendous growth, right? I mean, and not just domestically, right? I mean, Europe, South America, Asia. I mean, these are untapped markets effectively. And when you think about this over a little bit longer time horizon, like 10 years, 20 years, 30 years, I mean, it's sort of mind-boggling when you think about the opportunities. And also, it's hard to see a world where the winners aren't in the US, right? So I think you can look at the landscape and you can start to identify some of the companies that are going to have a lasting and truly meaningful impact on the sector, and you can still participate at effectively a very early stage, and so that is exciting.
Now, what is your role, responsibility in the organization? And then tell us about, Jigger, your partner, and how do you guys,
Yeah.
delineate
Yeah, so it's changed.
responsibilities?
So when we founded the company, I was the CEO. And in that role, obviously you have a breadth of responsibilities, but where my focus was, and I think my skill sets were best utilized, was really like attracting talent. I mean, we hired, at the height of I guess the scaled company, we had about 12 or 1,300 employees. So, attracting talent, raising capital by sort of articulating the vision to folks. So, explaining kind of who we are, what we do, how we're positioned in the market. Those were some of the areas where, as the CEO, I was most focused. I'm not naturally an operations guy. And so the partnership between Jigger and myself was really accretive because he brings decades of cultivation experience and he's a highly efficient operator. And so he was always sort of responsible for the business verticals, if you will. And my role as the CEO was more to tell the story, attract capital. And as you may or may not know, a lot of companies in 2018 and 19 were flirting with, and some did go public, all on the Canadian Securities Exchange. We went down that path a couple times, both as a pure play, go public strategy, and then as well as part of a larger SPAC. So, again, my focus was sort of articulating the vision and telling the story, and Jigger's was really making sure the business units were functioning as they were supposed to. So that was sort of from inception to about 2020. What happened in 2020 with the pandemic and the true lack of capital in the sector, we as a company decided to pivot strategically. We were doing everything. We were cultivating, we were retailing, and we had a massive B2C delivery vertical. So I told you we had about 1,400 employees. About 900 of those employees were delivery drivers. So we had infrastructure effectively up and down the state. I mean, Sacramento, the East Bay, San Francisco, all the way down to Long Beach and Orange County. We were making about 3,000 deliveries a day, largely in a partnership with Ease. And we saw tremendous strategic value in that vertical, right? Being able to get in front of thousands of California customers every day. The challenge was that business is highly expensive to run. And, we couldn't get the numbers to work. We couldn't figure out how to run it profitably. So we made the decision to shut it down completely. And we exited that business line between Q2 and Q3 of 2020. So the company went from like burning a few $1 million a month to all of a sudden generating a couple $1 million of profit a month. As we doubled our production capacity. And it was during that period that we said the strategic focus has shifted. We're no longer chasing growth. We're not looking at constantly raising capital. We're not looking to go public. We're looking to run a really efficient factory, if you will, right? And so we sort of made the change at that point. And my role shifted a bit to be more focused, I'd say, strategically and less, day-to-day operationally. So my current role is strategic director for the board. So my focus in that is really on, it was on M&A initially when the markets looked like there was a path for some M&A, like this is, 21 really. And anything to do with capital markets, and then really anything to do with business development and expansion. As I was telling you earlier in the conversation, we have some deals that we're looking at in other markets. So that's where the majority of my time has been spent today, and how the role shifted a little bit.
Yeah, interesting. So when you guys were going through this, burning a couple million a month, right? And you're looking at your 900 delivery drivers, and you're looking at this really tough B2C. That
Yeah.
is, it's so tough to be in that, right? The direct to consumer is very expensive and very difficult to figure out, at least from what I've seen. You guys did a pivot.
Yeah.
What was the precipice? Like, what was the thing that said, okay, we will pivot?
Yeah.
What was that besides the $1 million a month or whatever?
Yeah.
That helps.
Yeah, of course. The decision was, I mean, we just, we had the hard conversations internally and said, listen, the lack of growth capital is sort of necessitating a pivot in strategy. I still believe this, and the infrastructure that we had built and the ability to be, at that point, I would say we were probably the biggest retailer in California. I mean, processing 3,000 plus transactions a day, all throughout the state. Like, if your focus, and our focus at NorCal has always been about creating great products and leveraging that to create meaningful brands, right? And so to be in front of thousands of customers all over California every day we felt highly accretive, to that strategy. But when it's costing you $2 or $3 million a month to do that, and you don't have the traditional pockets of growth equity available to finance that, you kind of have to make tough decisions. And it was really a product of just kind of where the sector was and the fact that there was truly a lack of capital. Now, I say that, the benefit of that strategic pivot, and I think we've evolved our thinking a little bit today, is that it forced us to truly focus on the things that we do best and to spend our time and energy really reinvesting in what it is that we do really well versus trying to do everything. And I could talk more about that, but I think a lot of companies' strategy initially was to get as big as they could. And they all sort of had a view that we could do everything, right? We could be great retailers, we could be great growers, great extractors, great distributors. And at least in California, given how incredibly challenging this market is, I think a lot of the companies that are around today and thriving and in market leading positions out here kind of have that same view. Like, it's really imperative that you focus on the things you do really well and recognize that you really can't do everything. And we've certainly taken that approach, and it's benefited us immensely.
Yeah, that's such a good lesson. But to do that from my own perspective, right? And I wasn't on the inside. I have no clue what's going on. But like, for me to make a pivot in my own businesses or whatever, man, I really got to take a step back. I got to drop my
Yeah.
ego for a minute, and I got to go, all right, what's really working and what's the truth behind the numbers,
Yeah.
right? For you to go through that pivot, and then also to move role from CEO, the visionary leader, the guy who birthed this from with the guy who was counting people outside of a dispensary.
Yeah.
What was that like in terms of your identity, in terms of you
Yeah.
showing up every day? How'd that affect you?
Yeah. No, I mean, it's a good question. I mean, yeah, I think it, you do a little bit of like reflecting, right, in those moments. And I think, the thing I always believe first and foremost was like, we're stewards of this company, and we have so many stakeholders, right? Investors, employees, people that we're in business with that are reliant on us. And I wanted to show up every day and contribute however I could, right? And I think when we started this company, well, the skill sets that I brought as a CEO, as I said earlier, were really, geared towards raising capital, telling the story, attracting employees. So when those were what was sort of required, I was a pretty good person for that role. As the strategy shifted, and you're right, Josh, like we had some challenging conversations, less so because we were shifting strategies, more so because we had 700-800 people that helped build this business vertical that was functioning great. They were doing everything they were supposed to do, but we didn't have the capital to support that, and we had to wind that down. I mean, these are people that we've became more than friends with, right? I mean, and so that was really a lot of the difficult and challenging moments in those times where like, well, we have to do this. right? And it's not something that we feel like we had to shut down because we weren't executing. It was like the circumstances externally necessitated it. So that was challenging, right? And as the strategy shifted, it was really easy for me to say, okay, I'm gonna play a different role now because there's a different set of there's different objectives, and the truth is the titles don't always mean that much. Myself, Jigger, and there was a couple other folks that were truly like making the decisions, in sort of a committee-like way anyway. It was just sort of like, whose role is what and who's focused on what and where's the sort of responsibility lies. So I was happy to take a different role and contribute differently. The challenging stuff was more winding down a business line that we built from scratch, that we just had tremendous people, every day showing up and doing the work. And unfortunately we had to pivot out of that. And that was tough.
That it is tough. You talk about fast growth, right? Like you guys experience fast growth for, 12, 13, however many employees, which I'm interested. What were your drug policies back then? We could discuss that on another time, right? Like it's so weird, right? Like every single job I've had in the past, I haven't had a job in a really long time, except I'm my own boss. But, the drug policies were pretty unique. That's got to be a challenging thing for the industry and for different states. And if you travel and you do recreation here, what's that even look like?
The drug policies? Yeah. Well, I mean, a lot of it's encouraged.
Right. Use the product.
We drug test to make sure you're on it. No, I'm just kidding. No, I mean, we didn't have very many issues with that. But I think for consumers, it's been a bit of a labyrinth. It's been a bit of a confusion because it's less so today. I know when 2 and 3, 4 years ago, cannabis is legal in California, but your employer tests you for cannabis. It's like, what do you? It was a confusing place for some folks to be in. I think a lot of companies have kind of come around now, and you're seeing it too with like professional sports teams where they no longer test for cannabis. Like, again, it's the normalization of it, right? It just slowly by slowly it's kind of crept in, and it's atypical to meet somebody that's been like fired because they were, unless you're like, doing something where you really shouldn't be imbibing, but if you're working for a cannabis company, you're good.
You're probably all right.
You're fine.
It probably attracts people who are fans of the product or who believe in the medicinal uses of it or the recreation or whatever. So it probably attracts the people who believe in the product itself. As you move roles, right, you're now dealing with the board, you're dealing with business development at a high level, and you're dealing with strategy, mergers and acquisitions back in the 20s when before or 2021, before the world is getting absolutely weird. What does a day-to-day basis look like for you? Are you doing a lot of podcast interviews, public speaking? Like, what's a day-to-day look like for you?
Yeah, there's a fair amount of the public speaking, whether it's conferences or panels or podcasts, just sort of telling the sort of evolved story of NorCal, right? Because we did go through different iterations, and so and then in terms of like the day-to-day, it varies. There's a decent amount of travel, right? As we look at other markets and other opportunities, a lot of dinners, in-person meetings. It's really, the benefit of my job now is, and doing it on behalf of NorCal, is that we're very known in the space. People know who we are and have sort of seen the evolution of the company. And so when we're looking for new opportunities, I should say new opportunities are coming to us all the time. Most of what I do is filter them, right? And so because we only have a limited amount of time, how do we decide what we prioritize? That's been a lot of what I've been doing for the past 6-9 months, and it's nice. It's a nice place to be. We don't have to tell people who you are. They're like, hey, we know who you are. Would you be interested in working with us? Would you be interested in partnering with us? That and raise capital. So all of these projects that we do, We'll bring either our own capital or we'll raise external capital. So I do a lot of the investor facing stuff as well.
Do you guys do it through a fund or like an SPV?
We
Like
do them through
what's
SPVs. Yeah.
okay?
So we'll set up a new project in a new market with a new entity and bringing capitals, directly to that entity.
Yeah, awesome. Yeah, I think that's a great way to do it, deal by deal basis. Um, when you do public speaking, do you ever get nervous before you go up on stage? Because I do.
I used to. And I was doing a lot of it 2019 and 20, and we hired like a public speaking coach. I did, and then it was super helpful. I think it's like most things, the more you do it, the more comfortable you get with it.
Yeah.
But yeah, I used to use the analogy like if you remember the pictures of folks that were building skyscrapers in New York in like the 20s and 30s, and they'd be suspended right on these massive beams, thousands of feet in the air, like just eating lunch with their legs dangling over. And you're like, that you must have been so scared, right? And I'm sure they were like the first few times, but you go through it, you get comfortable with it, and so it's part of the job. I actually don't mind doing. I'm sort of proud to talk about what's going on here and what we're doing and give folks our perspective on the industry. It's a very challenging business, and so if we can help provide folks with some perspective and advice, and it's a privilege to do it. I'm happy to do it. So
Yeah. What have you found? Give us some tips on, and you could choose the path, right? Red pill, blue pill, you get to choose. Give us some tips and tricks that you've learned about raising capital or
Mhm.
about growing and scaling a business or about public speaking. What you get to choose.
Well, I'll start with the capital since I think that's sort of the thing a lot of folks are most interested in. Going back to 2015, which is the first time I raised any money in the space. I raised $2 million from friends and family to build out an indoor cultivation in facility in San Francisco. And at that point, I mean, cannabis was illegal in California. You had Prop 215, which was a limited immunity, but it wasn't medically legal, it wasn't recreationally legal. No one had any idea how this industry was going to evolve. So I remember calling friends and at the time and like, hey, I got this opportunity and I think it's interesting. And they were like, you're crazy, but we trust you. So here's a little bit of cash and
You're crazy, but
maybe you'll
here's some
figure
money.
maybe you'll figure it out, right? That was sort of the first wave, but we did. We executed, and we brought these folks back. We took them through the facility, and they were like, "Wow, this is a real business. You have employees. Like you guys are figuring it out." So, that was 2015. I'd say between 15 and 2018, we did about 6 or 7 different SPVs,
Cool.
and each of them would raise anywhere from a million to like $2 or $3 million. So in total, over a few years, we raised, $15 million, which was a lot for California operators. We were sort of unique in that. Then in 2018, as the state finally legalized through the legislator, medical cannabis, and then there was an eye to adult use being legalized, capital started to really flow into the space, and we rolled up all these SPVs into a holding company, and that was the first time we raised any capital for NorCal specifically, and really had a balance sheet that allowed us to do that. So from 2018 to 2000, late 2019, we raised probably around $100 million. We did a $25 million Series A. We did about $30 million of convertible notes. We did a senior debt tranche for $20 or so million. So my job was, and it was pretty much consistent. I mean, we were growing at such a pace. We were acquiring companies, and that's what our investors wanted. That's what our board wanted. We were focused on that growth and scale. So I was constantly raising capital. And I mean, in terms of like lessons that I've learned and the perspective I've gained from that, and sort of where we are today, and kind of with respect to the capital markets in this space, I'd say I think at the time, I'm not really sure the industry or the investors had a fully flushed out view of what they were investing in, nor do I think they really knew how to distinguish the stories, right? There were a lot of companies that were saying we're all going to do the same thing, and I think there was a period of euphoria where investors were like, I don't want to miss out, So I'm just going to fund anything and anyone that shows up and speaks at this conference, right? There wasn't, these companies didn't have operational track records, right? They didn't, a, it was all a business plan effectively, and a lot of money flowed in and pretty quickly dried up, quite honestly. And part of the reason that happened is because if you think about the typical like evolution of a company, your early rounds, your seed rounds, your Series A rounds, those are often going to be done by, friends, family. In traditional industries, you obviously, tech specifically, you have venture investors that do focus on that. But we obviously, being a federally legal business, did not have access to those pools of capital. So companies are financing themselves with effectively high net worth individuals. And that works your series, that works for your seed round and your Series A. But as you start to need and require much larger amounts of capital to scale, I think what we found and the industry found sort of all at the same time was, well, shit, there really aren't these institutional pockets to fund that growth capital. And the sort of high net worth guys, that kind of dried up. And that sort of started the first period of truly challenging capital market environment, which I think was like, I'd say like Q2 and really Q3 of 2018. Sort of the writing was on the wall. People started to realize like, oh, there's really no additional capital here. And if you looked at followed the evolution of the publics, you saw their stock prices start to really fall pretty precipitously in Q3 and Q4 of 18 as we realized like there's really no money here.
It's so super interesting. So, you guys are growing fast and you're acquiring companies, and at the time, money's coming easy.
Yeah.
And you got through, high net worth individuals and family offices, and you guys are cranking.
Yeah.
And then it got to the part of the Series B where it's like, we need to start
That's right.
exploring.
Yeah.
We gotta see what's next, right? Always be raising.
Yeah.
We gotta either go institutional and they're saying no, or public. Why, so the next option is maybe a SPAC or an IPO through.
That's absolutely right. And
Right?
and that was the path that a lot of these companies went on. But the problem was that when when you go public, typically, the proceeds are being raised in an IPO from institutions, right? That are taking much longer time views, right? So they want to put money behind good companies, and their time horizon is decades, not years or months. Cannabis was different, right? You had all of this momentum pre-IPO, these companies IPO, and very quickly they all learned that there was like zero aftermarket support. There was zero real institutional buyers for that paper, and the valuations that they went out with were detached from reality. And very, very, very quickly, folks realized like, oh, there's no capital, and the companies that are going to make it are going to have to figure out how to be self-sufficient. And that's an entirely, it's a 180, right? I mean, if your strategy, your investors are focused, your board's in focus, your company's focused on scale and market share, and then all of a sudden it's like, oh no, you got to be self-sufficient. You got to bring in more cash every month than you spend. It's like it's a really abrupt pivot that a lot of companies couldn't execute. And yeah, I mean,
That's such a good. Oh my gosh, that's such a valuable lesson. And you guys started seeing that early on, and started making pivots for that. So what's the future look like then for cannabis companies? Like you get to the point, are you tapping out at, don't grow past this or it's going to burn you, or focus on sustainability early on?
Yeah, I certainly think that, focus. I'd answer that question this way, Josh. I think it's sort of unfortunate that the regulatory environment has lagged sort of the progress that the operators are making, because fundamentally, if you have a strong company and you're in a market leading position and the industry is as big as it is and as fragmented as it is, I think it's almost a little premature for some of these companies to be solely focused on generating cash flow, right? Like in most sectors, there's investors are willing to tolerate operational losses for significant amounts of time if they are in pursuit of building a more valuable company, right? You see this in tech all of the time. And so I think cannabis companies were almost like unfairly forced to pivot a little bit earlier than they probably should have in their evolution. But we have to work within the confines of the sector. So the companies that have been able to make it, we're able to execute that pivot, right? The ones that couldn't figure out how to generate profits, they're really not, they've either gone out of business or they will go out of business. So it's, I think in some ways it's unfortunate, but it's forced the maturation of companies, which at the end of the day, it was going to happen anyway. It just forced it a little bit quicker. And so I guess you could look at it and just say there's pros and cons, but certainly in 2018, we all felt like we should be pursuing growth and market share, and the fact that we were burning capital was not a problem. What we didn't fully appreciate was that there wasn't those traditional sources of growth capital available, and without those, you kind of couldn't have that strategy.
In dog years, you could have had that strategy, right?
Exactly.
35-year-old industry, you see other people go through the full path from seed to exits, right? You see that, but in a new industry, you don't have much to compare it to.
That's right, and the federal legality is the challenge, right? Lack of banking, lack of access to capital. It's not like institutional investors don't see the opportunity here, and had they been, or if they or when they are able to participate, they wouldn't, I don't think, have been as solely focused on generating cash as they would about build a great business, right? Yeah. But that's not a source of capital, unfortunately, that we have access to yet, and so that lack of capital forced strategic pivots in companies, which TBD on whether or not that creates the best companies, but it is the reality that everybody's operating in. So
yeah. So Doug, all right, on cap raising, since that's the pill that you chose to go down the path of, as we're sitting there, and let's just say we're being asked for capital. Mm-hmm. You and me are hanging out, we're investors, and we're looking at a project, and it's right up our wheelhouse. The money looks good, it's in our niche, we could add value strategically, we could show up with some money, some network, like this is a good opportunity. But we're looking at the team, the management team, and we're saying yes or no. What are some things that you look for as an investor before you'll write a check in terms of the people in the team?
Yeah. So I think it depends on the stage and the opportunity, right? Like if it's very early and it's just an idea, you're really looking at like the folks running it, right? It's more of a bet on the management team, right? Do these people, are they passionate? Are they, is this something that they live and breathe every day, and what are their relevant skill sets, right? And is that a good fit? If you're looking at stuff that's more mature and later stage, you have more traditional metrics to sort of comp that against, right? But I think, it's really a bet on the entrepreneur, right? Especially if it's early. And I think that's where there's, personally, I find the earlier stages more interesting as an investor. And part of that's because maybe we've grown and scaled businesses. And so I have an appreciation for what that takes. And you can kind of identify talented entrepreneurs and get excited about getting behind them.
Yeah, it's definitely about the people. You mentioned a while ago, like there was this huge push, and we got to go in a few minutes. Great interview, by the way. Like I've enjoyed talking to you. I lost track of time. But I got to bring this up because, like when something gets hot on the industry, we've seen it in all sorts of industries, right? From Bitcoin and crypto to, the cannabis industry to back in the day when MySpace, right? Like there's like pushes for something. What makes something stand the test of time, in your opinion? Why is cannabis going to stand the test of time?
Sure. Yeah. Well, I think it has, right? So, I mean, people have been consuming cannabis for thousands of years. And I think what's unique about this industry truly, and this is what attracted a lot of people, investors and operators to the space 7 years ago, there's zero question about the demand side, right? nobody has said ever to me, well, I don't know if it's a good business. I don't know if people are going to consume cannabis, or I don't know if they're going to continue to consume it. We always knew it was this massive industry. It's the evolution of that from the black to gray to white that sort of brought us into it, right? So that part of the equation in this industry at least was never a question. Whereas I think some of these other companies you mentioned, MySpace, et cetera, they were creating products and services that people hadn't necessarily been exposed to yet. And it was a question as to whether or not there would be adoption. That's not an issue here, at all.
And I think that these kind of things from black to gray to white starts from conversations, right? Like growing up, like you don't talk about cannabis at the dinner table with mom and dad. Now mom and dad are using cannabis,
and
right?
asking you at the dinner table, what should I use? Or can I get more of this? I get that from my relatives all the time. So.
Do I eat it? Do I smoke it? How do I do this stuff, right? But the idea of talking about it, I think, is super healthy. And that's why on this show, we like to support the conversations of many different types of deals and especially like things that could have a huge help for people. Now, you mentioned anxiety, you mentioned sleeping, but there's a lot of people dealing with like from former, I'm a former medic, former medics and military and police and fire, like for PTSD and for calming the mind for some. There's phenomenal use cases of people who are turning to this rather than painkillers and rather than stuff like that. So like, no,
or alcohol, right?
Alcohol.
I think you said too. Yep. Yeah.
I don't, the only bad decision I've ever made on cannabis, hypothetically, is maybe eating too much, right?
Yeah.
Like I've never driven. I've never like gone out and like, let's go do something. Alcohol is a different story, right?
It is.
It makes you Superman.
Yeah.
So I'm with you, man. Great point. There was this thing you said, the fear of missing out. There's also the joy of missing out, the JOMO. There's the FOMO and the JOMO. As you guys are building out and growing, what are some areas that you are excited about in the future? And what are some areas that you're like, no, we're going to steer clear of this direct B2C?
I'm kind of glad you answered or asked that question because through the sort of maturation and the perspective and having gone through so much running this company, the JOMO, as you say, it's real. Like, I would rather walk away from like 10 good deals to avoid doing one bad deal, right? And so having an appreciation for like, the process, right? Once you go through it a few times, you sort of see how it all works and you have a much better perspective from which to enter it in the first place. But we've been a lot more selective, right? We've been highly selective and we're trying to be sort of ruthless with our time, and we really are only looking for like opportunities that are truly like too good to pass up, and we're very fortunate that like we have a great reputation, and people, want to work with us. So we have a ton of opportunities and options. And I think the thing I've learned and we've learned as executives and as leaders is like, I'd rather pass on like 10 good deals to avoid doing one bad one. Right. Sure. And so the idea that like you're going to miss out, right, or somebody's getting bigger than you. I mean, these were things that I think were in the back of all CEOs' heads 5 years ago. Like, well, I don't know if we should do this, but my investors are pushing me to grow. We have to do, this company just released this press release. They raised a bunch of money, or they did a merger, or they did something, and we can't lose ground. And the truth is, this is a marathon. And the companies that are going to be around are going to be around because they're fundamentally better at what they do than anyone else. And if you can tune out the noise and truly focus on your core competency and reinvest in that acts as the filter from which you can evaluate whether a deal's worth doing, right, or pursuing. But the idea to just do them to get bigger, do them to do them, or for ego, that destroyed so much capital and in some cases destroyed businesses, And so that's been with maturation, the perspective that we've gained, we've absolutely taken a pause and said, look, we're only going to do things that squarely fit in our core competency with great people, who we can verify. Like there's so much bullshit in this industry that we've learned to navigate through the hard way. And now we're applying that perspective to everything we do going forward. And that's been quite helpful for us.
Yeah, super awesome. There's going to be two more questions. I might lie on that because my brain like will think of something else, but like two more that I plan on, right?
Sure.
The one is, where could people go to connect with you and do a deal and learn more about you guys?
Yeah, so I mean, you can go to our website, norcalcan.com or norcalcannabis.com, and you can contact us there. The truth is, Josh, it's a pretty small industry, and most people know, how to get to us either directly or through one degree of separation. There's a pretty developed infrastructure of brokers and bankers, and they all know us, and so. But yeah, I mean, anybody listening, watching, feel free to reach out directly, and we're happy to have those conversations. But
yeah, Doug, what question should I have asked you? You're like, Josh, you missed it. It's right in front of you, man. You missed it. What question should I have asked you?
No, well, one, I've really enjoyed this, and it's been fun to talk to you. I don't think you missed anything per se, but if just thinking about kind of like the, sort of the thing that I think maybe gets lost for folks that have been in this industry for the dog years, the 20, 30 years, it's what's most exciting about the space, right? Because I think there's been a lot of negative sentiment, I mean, for a lot of different reasons, the lack of pace at which the feds are changing the law, there's been a whole, lack of capital, valuation. I mean, there's been so much that I think people have, focused on kind of the negative and not fully appreciated the positive. And when I say that, I mean, like, again, this is very, very early. This industry is, again, there is no question about the demand side. The opportunity to take the brands and the products that win meaningful market share and mind share in the US and export those products to Europe and Asia and South America, and to bring this plant to all corners of the world to help people. I mean, that's really exciting. And there are, without a doubt, established companies in the US today that are going to be participating in that. And that's exciting. And so I think there's been, frankly, too much negative sentiment and not enough focus on what's possible and where this industry is going and how this industry is helping people. And it's been a challenge, but that's okay. I think we got to look at the future. And I think there's a lot to be excited about when you do.
Yeah. Yeah, there's challenges, but that makes it worth it, right?
That's life. I mean,
yeah.
Anything we're doing is a challenge, but that challenge is in pursuit of some pretty great things. And again, the ability to look, fundamentally, Josh, like one of the things I was most excited about when I started NorCal was like, I thought it was rare, and I still think it's rare, to create a product that truly helps people, right? When people consume cannabis, it makes them feel better, whether that's medically, recreationally, some hybrid of both. Like, far be it for us to decide, but like that's a privilege, right? And as we've sharpened our skill set here in terms of cultivating what excites us, the opportunity to bring that to a much larger audience, right? Not just California consumers, but folks throughout the country and eventually like throughout the world. And that's a pretty cool position to be in.
Yeah, super cool. Doug, awesome job. Thank you for coming on the show. Fellow deal makers in the audience, as always, reach out to our guests. Say thank you for sharing your knowledge, sharing your experiences, your successes, your failures. And if they connect with you and you want to do a deal with them, connect with them and find a way to work together. That's the purpose of the show. If you have a deal that you would like to talk about here on the show, head over to thedealscout.com, fill out a quick form, and maybe we'll get you on the show next. Till then, we'll talk to you all on the next episode. See you guys.